information that we can talk about in regards to VA loans. So this week, we're talking about FHA versus VA loan. And the reason why we're talking about it is because there's a lot of agents and loan officers, they think that there's FHA guidelines that also apply to VA loans because they're both government financing. And today we're going to talk about the 5 most common, and what Justin and I, we talked about the 5 that have the biggest impact to veteran home buyers. And impact, I mean, keeping veterans from putting offers on homes that, obviously they like and it fits their, location and budget and stuff like that. But then also too, keeping their loan from getting approved, right? Or keeping it getting to the closing table because of whatever it may be, the appraisal. So we're gonna talk about those five common differences and having the biggest impact on that. So, all right, Justin, I'll let you kick it off with number 1. Again, we're talking about FHA versus VA loans and the differences. Go ahead with number 1, Justin.
All right, so number 1 on my list was the no 100-mile radius rule.
Okay, well, that's a good one. I actually like that.
Yeah. So the thing is with they do this a lot to prevent people from basically doing property flipping. With FHA, They don't like to see that. But the thing with VA is you can actually go out and buy the house down the street from you. There's no rule that says it has to be 100 miles from your last property. So if you live at 123 Main Street, you can in theory go up to 223 Main Street, which is 0.2 of a mile up the road. Mm-hmm. But the thing is that house has to be either superior or more conducive to your lifestyle. So it has to be a superior home. What does that mean? Basically, you have to be buying a house either that's larger in square footage, has more bedrooms, more baths. It's a newer home. Maybe it's built in 2013 instead of 1976. It's got to be something that's superior. Typically, it will require more money. It's not going to be the same amount as the first house you bought. But the other way too is it doesn't necessarily have to be superior. It could also be inferior if it's more conducive to your lifestyle. Say, for instance, you are, retiring, right? You're one of those vets that did your 20, 30 years and you have a house, you had a house with kids, the kids grow up, they're moving out of the house now because they're going to college.
You're downsizing.
And you want to downsize. Yeah. Now you downsize, you want to go in from a 5-bed, 3-bath into a 2-bed, 1-bath because you want to downsize, but it's just up the road. You can do that too because it's more conducive, Maybe
in the same neighborhood. Literally, it could be right down the street.
Yeah. And I think
here's the thing, and the one thing to point on why this is important is so FHA and VA are primary homes only. You can have 2 FHA loans, but those 2 houses have to have a 100-mile distance in between them, right? Yep. So that's the difference with the VA is that you don't have to be 100 miles away from the current primary residence, right? You could literally buy the house right next door, right up the street, or like you said, a mile away, but it either has to be superior to your current home, basically nicer, newer, or whatever it is, right? Conducive to your life, or you could be downsizing, whatever it is. So I'll let you keep going. Sorry.
No, all good. We were chatting yesterday about this too, is like a scenario where you might have a relative move in with you. Say it's the opposite spectrum. It's you, a wife, a kid. You guys bought a 4-bedroom home. You're all comfortable in it. But now all of a sudden you have a sick or ailing family member. Maybe it's an in-law, maybe it's your mom, dad, grandma, grandpa, auntie, and they have to come live with you, right? Well, where are you going to put them? Okay, well, now we need to upgrade. We want to stay in the school district because we don't want to rip our kids out of school. That could be traumatic. We want to move up the road. We're going to get an accessory dwelling unit. We're going to get, instead of just a single family property, we're going to get a multifamily. And even if that multifamily isn't superior and it's not a nicer home, like because it's a multifamily, it's a different style of home that's more conducive to your lifestyle. It's very easy for us to write up a letter of explanation for that. And that's your motivation letter for moving, as long as the VA wants to help you, as long as there's a good reason for moving.
All right, cool, good stuff. Okay, 100-mile rule. The VA does not have a 100-mile rule like the FHA, as long as you have a valid reason. Okay.
Mhm.
And that means that you can rent out your current home, go purchase another house with your remaining entitlement. All right, so I'm doing number two. Mine is 90-day flip rule because I have an awesome story that goes along with it.
Awesome.
So we all know FHA has a 90-day flip, right? You cannot go under contract until day 91 if an investor purchased it, right? So it has to be 90 days title seasoning on it with that. So,
So if someone bought a house to flip it,
yep.
just if I don't understand that, how would you explain that to me again?
Yeah, so if I bought a house, I mean, it's in an LLC, or basically if I bought a house in my name, for me to go ahead and resell it to you, Justin, we would have to wait until day 91 to get under contract. So there
Okay.
has to be a 90-day title seasoning on an FHA loan, right? It not necessarily it can't be, doesn't matter if it's a LLC, Open Door, or me as an individual. If I purchase it, there has to be a 90-day title seasoning, and then I can get under contract for an FHA purchase, right?
Got it.
So with VA, there is no 90-day rule. And what's super cool, I have a good story, is that of a veteran, unfortunately went through a divorce, was renting in a neighborhood, wanted to stay in that neighborhood, kind of like you gave an example, keep the kids in the same school district. Only house in the neighborhood was that was for sale, fit his budget. They were working with somebody prior to, they got pre-qualified, but they didn't put an offer on this house. I got hooked up with him because he didn't like the lender. We started chatting, and I'm like, "Hey, do you have any other houses? Do you have any houses I can run numbers on that you like?" And he's like, "Yeah, but I can't put an offer on because you're not accepting VA." I'm like, "Well, let me give him a shout."
Yeah.
They bought it 45 days ago, and they're like, "Well, we're not accepting government financing." And I'm like, "Yo, like, well, VA doesn't have a 90-day flip rule. Here's the guideline. This guy's well pre-qualified. 30 days later, we're at the closing table." So 90-day flip rule, VA does not have a 90-day flip rule like VA. And really it just takes, I think it takes lenders getting, I wouldn't say involved, but just really having the conversation, right? You like this house? Why don't you put an offer on? Oh, they're not accepting government financing. Well, why not?
Why not?
Asking those questions, providing education, we got them under contract. But it's also too, and the reason why we do this is that we're trying to educate agents, because if you're an agent and you know your buyer is a VA buyer, but you're reading in the MLS, because they'll say in there, "Hey, we're not accepting FHA, VA. Why? Because we just, it's an investment." Like, well, hey, my client's a VA buyer. There's no 90-day flip rule.
Yeah.
So that's that one. Okay, cool. Number two was 90-day flip rule. VA does not have a 90-day flip rule like FHA. All right, Justin, go with number three.
Now, just making sure. So I have condos on this one about the recertification. Is that your number three, or is that just my number three on this?
I think we just kind of had our list and we put them together.
Yeah.
So go ahead.
So we'll talk a little bit about condos. Now everyone, well, maybe not everyone knows. Now VA, you can't go for a co-op. That's the one restriction. But VA, you can go for a condo. So for those of you who don't know, that's a very valid piece of advice. VA you can do condos with. And the thing about condos with VA is the only difference is we need to make sure that the condo is approved by the VA. So similar to the process that we go through if we have a condo or a co-op where, the lender or the real estate agent, they have to gather up all the documents, they have to submit them over to the bank to get an approval from an investor. It's kind of similar, only instead of that investor, we're submitting those documents over to the VA.
And when we say invest, we're talking about FHA or conventional, right?
Well, in like when we gather documents for a co-op or a condo, we have to get the budget, the financials, the bylaws, articles of incorporation, all these important documents.
And that's what's required. That's what's required when it's FHA financing or conventional, and you're limited to how or second homes, all that stuff.
Yeah. So when we gather up all that stuff, the great thing about VA is with everyone else, right? If you're getting it approved through an investor or you're getting it like an approval, whatnot, that approval expires. But with VA, it never expires. So if you got a condo approved in 2007, that approval is good for life. It stays with the entire project. And even if you just have one client that goes into there. So if I have a veteran that goes and he buys in the condo complex, I don't know, let's call it just Sunnyside Boulevard. I don't know why that's come out my name. Sunnyside Boulevard condo complex.
Yeah.
If there's 1,000 units there and one veteran buys and you get VA approval, that approval expands to the entire project. So all 1,000 of those condo complexes, those condo units are now approved with the VA. So it makes it a lot easier. And one of the things is people always look like there is a VA list. There is a verified list you can look to see if something is VA approved, but oftentimes you won't find them on that list. It's, if you have any questions about the VA approved list, reach out to us offline. We can look it up for you or show you how to do it, because we can get the entire list per state. But if it's not on the list, don't be dismayed too much, because it's actually pretty easy to get a VA condo approval done. It takes about 2 weeks, but it only requires us to get those documents, those same documents that we would be getting anyways for getting approval. Articles of incorporation, bylaws, financials, budget, all that, reserve requirements, all that stuff. Once we can get all of that stuff in, we submit it over to the VA, and typically the approval process will take about 2 weeks. So as long as that, like you can work on getting those documents and you can get those documents, submit it for the approval, get that veteran into that condo,
And one thing to note too, if obviously primary residence, let's just say, I think the most common thing that comes back for a denial, right, is it's a leasing, I forget what it is, but you can't lease it out or whatever. I apologize. I'm very unprofessional, but there's usually a typical reason. But the veteran can actually say, I understand the reasoning behind it, and I fully accept the responsibilities. With that. That's the awesome part right there, is that it's a primary residence. The veteran can fully take on the liabilities of whatever the reason it wasn't approved or whatever it is, and we can typically still get it done and still get that loan done for that condo. And this is a huge win. We were talking about this earlier for listing agents, right? Let's just say you have a listing, right? You could either offer it to everybody or a select few, right? Cash only because it's non-warrantable. Conventional because whatever it is, no FHA, whatever it is. You can actually reach out to a VA specialist, and they can actually submit that unit for approval, right? And say, hey, by the way, listing agent, now you can add VA financing on your allowable financing because your condo is already approved. You know what I mean? And so what it does effectively too, like you said earlier, that whole complex is now approved, right?
And that's a great point, because for a listing agent, especially a lot of listing agents, they get one unit in a condo complex or a co-op, and they get a bunch more. So why limit yourself if you can expand your buyer's market? I mean, especially to a zero, down buyer, or like who can come in, be strong like that. If the condo's cool with it, I mean, you don't even need to have the client under contract. If you can reach out to either one of us, anyone who knows VA like the back of their hand is going to be able to submit those, to get that condo approved. We don't need to have a client under contract for it.
Exactly. Yep.
Which is
huge.
That's
100%. Yeah, that's good stuff. Okay, cool. All right, so condos, they're a lot easier. 2 weeks. Even if you are a listing agent, you have a listing in a condo complex and you want to one up your game, get that condo VA certified, so that way you can move that unit faster, and then you can go out and start pitching and be like, hey, I'm selling these units and I'm getting them done. So that's more business for you on that. Definitely. All right, cool. I am going to go to number 3, and I'm going to go with the appraisal stays with the veteran, not the house. The appraisal stays with the veteran, not the house. So we all know FHA financing stays with the house for 6 months, right? Yeah, 6 months. So if the appraisal comes in low, unfortunately, there's a FHA case number that gets assigned to it, and it stays with that house. So at that point, you can't get another FHA appraisal. You can't accept another you can accept another FHA offer, but that appraisal is it, right? So now you've kind of just taken yourself out. You've limited yourself to conventional financing or VA or cash, right? So with the VA, the appraisal whether it comes in, the appraisal basically stays with the veteran. So it doesn't stay with the house. So if the appraisal comes in low, then, oh, you know what? I forgot to check here. Oh, nobody's commenting. So, okay, good. I'm not missing anybody's questions. So if the appraisal comes in low, it's not going to stay with the house, right? If the transaction doesn't work out, then, you can keep moving forward with that. And so that's one of the cool things is the VA appraisal stays with the veteran, does not stay with the house. Unlike FHA, the appraisal stays with the house for 6 months, and you got to kind of figure it out from there. So
Yeah, yeah, and that's a big one because getting a case transfer for an FHA is sometimes such a pain in the neck, and it can take a while, especially if that lender is reluctant to let go of that appraisal. And one time I had a client, he got his appraisal done. He decided not to go through with the property. He was a single guy, so he just didn't want to buy it. The listing agent contacted me and said, "Hey, you need to make sure that you assign the appraisal. You assign the appraisal over. Can we have a copy of the appraisal?" And I said, "Well, no, I don't think you understand. This is just for the veteran. Like, it doesn't stay with the house. You can get a new appraisal. You can get a new FHA appraisal, conventional appraisal, a VA appraisal, whatever kind of appraisal you want. For any kind of loan, it's not applicable. It's not, it's not detrimental to your home if you have a VA appraisal done on it,
right,
because and you fall through, because it stays with the veteran, and
yeah,
it's just a major key.
yeah, no, it's huge. So, all right, we're on number 5. Justin, I'll give you the honors. How about it? I know this is gonna be a good one. We've already planned this out. I know we're trying to be all sly and stuff like that, but
Now, were we talking about the MPR waivers or the
NPR waivers, and we have about 13. We have 12 minutes, so we can dive a little bit deep because I think the appraisal warrants
Yeah,
a whole thing. So let's just talk about the NPR waivers, right? Because that's one of the big things. Because I'll let you take it from there, but let's just stay there. That way, we'll have material for the next one.
no, definitely. No, because I actually have one going on right now. I probably say I do about 3 to 5 a year of MPR waivers. And for those of you watching at home, not knowing what that is, so VA has something called minimum property requirements, right? But
So does FHA.
yeah, FHA and VA both have that.
Right.
Okay, so that's the same. But here's the thing: everyone always thinks, oh, VA has all these requirements and whatnot. What they don't know, you can get a waiver for it, and it's pretty easy to get a waiver for it. It's called an MPR waiver, minimum property requirement waiver. So what we can do actually is, let's say, for instance, I'll give the scenario. So I had a veteran, he was buying a house, or actually service member, he was buying a house. The fence had fallen over. He had this big, like 60-foot fence in the backyard. It had fallen over completely, and his chimney needed pointing, which I didn't know what that meant before, but apparently it just means putting cement around the chimney because it had a bunch of holes. Problem was, he didn't have a lot of money. It was, somewhere very cold, and it was during the winter months. So he didn't want to do all that work beforehand. He wanted to do it after. Came in subject to on the appraisal, subject to the fence being uprighted and the chimney needing pointed and being fixed. Well, what we did is, it's not something that interfered with the property being safe, sanitary, or structurally sound. Okay. We requested an MPR waiver from the VA. The way we did that, we got a quote with an estimate write-up from a contractor's report, and we had a veteran, I'm sorry, the letter from the veteran, the letter from the service member stating, I understand the risks associated with buying this house, with my chimney being broken and my fence being down, but I'm willing to accept them anyways because I want to move in. I think it'll cause me financial hardship if I were to try and repair it now or repair it prior to. It might jeopardize me getting a house.
You guys were laying in on
thick. And I have, yeah. Well, I had a whole templated letter that I wrote up. I actually, I wrote it up and then I used ChatGPT to help me rewrite it for him. And it was great because we submitted it. We got that approval right away. We got that waiver. And the next week we went to closing, without issue. The agent was like, what the heck? I didn't even know that was possible. Because they just see these myths and misperceptions about VA and appraisals, but they don't understand, like, hey,
Yeah.
There's a back door to that. There's a back door to everything with VA. You know, it's such a great niche to know, and that's
Well,
why it's great that
and
we're
here's
out
another
here
thing.
putting this out.
Here's
You know,
another thing. Okay, sorry. Here's another thing for listing agents, right? Let's just say I have a listing and your VA buyer has a subject to appraisal, right? And let's just say that you don't even know what you're
hmm
doing as far as VA, right? You don't know about, all this stuff. You don't know about NPR waivers, and the loan officer that your client is using doesn't know about NPR waivers. As a listing agent, if you know this, I'm gonna reach out to you and be like, hey, Justin, I'm like, the VA, we have subject to, these are not, and again, your NPR waivers, it's safety, sanitary, and structurally sound, right? As long as it doesn't fall under that category, we're good to go. Okay. But I can reach out, hey, Justin, ask the loan officer to submit an NPR waiver. Because
yep,
my client is not going to fix the chimney and they're not going to fix the fence. These are not safety issues. They are not structural issues. It's not sanitary. Please ask your loan officer to submit an NPR waiver. As a
yep,
listing agent, I don't want to lose my client's closing, right? Because they may want to go buy another house, okay? Because you don't know about NPR waivers or your loan officer doesn't know about NPR waivers. So as a listing agent, if you know this information, you can go to them and say, hey, let's submit an NPR waiver because we're not doing it. And I know you guys aren't going to do it either. So,
hmm yeah,
so yeah.
and one more thing just to tack on too is you can even hold escrow impounds for it. If the veteran wants to do it after they buy the house, like my guy right now, he has to repaint the trim because he has chipped paint around the trim of all his windows. He doesn't
Yeah.
want to do it right now until he closes on the house.
Mhm.
So we got the MPR waiver allowing him to do that, hold the monies in escrow impounds, and he's going to do it once he closes, and
Yep.
that's just more comfortable for him. So
Yeah.
there's a lot of flexibility with VA, and I think that's what people don't know or understand. FHA is very rigid, but VA very, very flexible.
Yeah, very, very, very flexible. And this is going to be my third time saying this. And this is for, I talk to agents and I'm like, hey, I would love to have a conversation about, VA. Well, I only do listings. I don't do buyer's agent. I'm like,
Yeah,
okay, cool. But, here's a couple things that can help. Maybe you don't lose a transaction, right? I don't know if you know this, but there's a couple additional ways that you can combat a low appraisal. You
yeah,
as the listing agent, you can push that if you know this material, right? If it comes in low. Also, if there's subject to on the appraisal, as the listing agent, if nobody's, if they're trying to cancel because your seller's not going to fix it, they don't have the money to fix it, but you know that it's not under those three categories, right? You can go back and say, hey, let's request an NPR waiver. So as a listing agent who just does listings, right? If you know those things, you can help save your transaction, help save your clients, transaction so they can move on. You can get another commission check. And that's why it's important to kind of know these different things because the VA is so different from FHA conventional, right?
yeah,
And it's so
yeah.
much more flexible because as a listing agent, you can take control of that
hmm
situation. So, as a matter of fact, I mean, I would say a VA offer is going to be way better than an FHA conventional because you have so much flexibility. I mean, we can go on forever about all the differences, but that's why
We
we're
could
going to
do
say,
three more Zooms about that.
yeah, yeah,
We could be
yeah.
here
So
for
we have all of 2025. I know this is only our third one for this year, but we have all of 2025. So we got a lot of stuff to talk about. So, all right, cool, good deal. All right, so let's review these really quick.
hmm
All right, so 90-day flip rule. The VA does not have a 90-day flip rule. You can literally, the day that, I take hold of or take ownership of that property or the day after, you can turn around and sell it to a veteran. There is no 90-day flip rule like FHA. 100-mile rule. If Justin and I, we have our houses right now. We have a VA loan on it. Let's just say I have another two kids. We need a bigger house. I can literally buy the house across the street. I can write a letter and say, hey, I need a 5-bedroom home, but I want to stay in my kid's school district. My other kid's school district. I can buy the house right across the street. There is no 100-mile rule with the VA. NPR waivers, minimum property requirements. If your appraisal is subject to, as long as those repairs do not fall under safety, sanitary, and structural soundness of the home, you can request a waiver for those repairs not to be completed prior to close of escrow. You'll get a letter from the VA. You give it to the underwriter. You get to the closing table. You're good to go. If you want to do an escrow holdback, the VA does allow an escrow holdback, but the lender, the lending company, they also need to allow that as well with that. The appraisals stay with veterans. They do not stay with the home like FHA. So if it comes in low or you're worried about that, please don't be worried about it because the appraisal stays with the veteran. And then condos. If you are an agent that's listing condos, you can open up the buyer stream for those condo units by getting that condo unit approved by the VA. It's a lot easier, it's a lot faster, and if a veteran is wanting to purchase that property, and let's just say the condo doesn't get approved, the veteran can actually write a letter and say, I understand whatever it is, what's going on with it, I fully accept the responsibility of it, and you can get, I think it's a site approval or whatever it is. You can get that actual unit approved with that. And so condos and VA, they're a lot easier to get done than FHA or conventional. So you can open the door from cash only to VA financing because it's a lot easier to get that done. So
yeah.
With that, I think that's it. Anything to add to that, Justin? Last words?
No, I think we'll add a little bonus teaser in there, maybe for, a follow-up time, to know that you can also dispute an appraisal twice with VA. I know we kind of hinted towards it, but I don't want to delve too much into the weeds on it, because we want to keep it short and sweet and to the point. But definitely, stay tuned to some of our future videos because we're going to talk about the fact that VA, you can have two appraisal disputes. You can have a dispute with Tidewater and something called reconsideration of value. And every other appraisal, conventional or FHA, you can't do that. You can dispute it once, but you have two different mediums and two different sources you can dispute with VA, and that's huge because everyone's always worried about value, especially in a market that's getting as inflated as it is now. And so definitely stay tuned to our future lives and videos because we're going to dive a little bit more deep into things like that. Who knows what we'll dive into next, but there's a lot of really good knowledge out here, and I think it's great that we're putting this content out. We got to get the word out.
No, for sure. Good deal. Okay, cool. Stick around. We'll do an AAR after this, and then everybody, Merry Christmas. We'll see you guys next year.
Merry Christmas, all.